I'm looking at equities as, and I'm actually tactically long. So there's a difference between putting out a big picture macro view and trading. And I think this gets lost in the nuance on Twitter. I have to trade the tape in front of me. And right now, I think we're taking the temperature down. And so every incremental headline we're getting is so far about taking the temperature down. But when we get past this sort of, we came to an understanding of an agreement with India, Japan, and South Korea, and we deal with the reality of the situation. You have the two biggest economies in the world with trade embargoes on each other. And what is the de-escalation scenario is returning the tariff rate to 60% on China. This is still enormous. And we have a minimum tariff rate of 10% on the entire world. That is what Trump has said. And so when we previously were optimistic about things like reciprocal tariffs bringing rates to zero, that's out the window now. We're talking about a material impairment to trade as opposed from this. So in my framework, I see this as stagflationary. It doesn't mean it's exactly like 1970s of 10% unemployment, 10% inflation, but it just means we'll have some stagnant growth with inflation. And so I think that, when I look at the deficit story, it only adds to the bond bearishness that I think will prevail over the course of this year. I think the bond market to start this year is sniffing out the permanence of these things. The deficits are out of control forever, and that inflation is not getting solved and is sticky. And so I think even if we get a little bit of an improvement in the growth side of things, then that's also bearish bonds. And so I think equities are just going to have these headwinds throughout the year. I just think it's not going to be a wonderful year where we had this Goldilocks situation where you had, 3% inflation, but the Fed is not going to tighten. They take that out the window. Well, that just flatters revenues a bit, right? And if anything, it was a boon for equities to have that. And you had also, they're quick to cut in the event of any sort of growth scare. They cut 50 bips for a 4.3% unemployment rate in September. So equities had this like perfect situation, plus the AI story, plus the flow of funds story. I think it just is going to be very choppy. It doesn't mean that we have to be down 25-30% this year. We could end up zero, but I think it's hard to see a sustainable bull run. And so I think you look for opportunities to rent the market, not to own it, frankly. I think the dollar is going to weaken materially from all the dynamics that we talked about. And so I think I look for opportunities to short bonds. I've been reshorting in recent days. Today was not fun, but I think, that remains, the story as well there. But on an overall, portfolio context, I'm very light on positioning. I'm very light on line items. If I normally run 30 to 50 line items, I want to run 15 to 20. I want to have a huge cash balance. I want to have the ability to react to extremes and be able to react to, the VIX goes to 50 and I want to sell, VIX futures or buy SVIX or something. I want to have the room to do that. I want to have the room to fade, the bond market on a Sunday night when, we rally to 385 and it can't stick there. I want to have the ability to say this equity market may rally further than it should. It gets people sucked back in, and then I can go and fade that. I want to be very lean and responsive to that. Part of it is I've had a good start to the year, and I don't feel like I need to chase anything or generate P&L from here. So part of that is my own circumstance. But I think in general, as a tactical macro trader, I'm looking at this and saying, I want to be very lean. And also, frankly, the way this could play out, the scenarios, you know me well, Felix, I think in terms of probabilities and scenarios, the things that I can come up with are just out there. The way this can play out, it doesn't mean any of them is going to happen. But the way that this could play out is really the range of outcomes is really, really wide. And again, I think you want to be prepared to respond to that.